Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our weekly recap for November 26th through the 30th, 2018. This is also the last week in the month for November, so we're going to be doing our weekly or our monthly recaps for M1 Finance and Merrill Edge, so stay tuned for that. Now, this week's video, we're going to be going over the main indexes, going over whether they went positive or negative, by how much, and year to date, are they up or down. We're going to look at stock futures. Right now, everything's looking very positive. Ending on a very positive note here on Friday. We'll see how Saturday goes. Friday, President Trump signed some trade deals with Mexico and Canada. Saturday, they're going to be discussing with China. So we'll see how that kind of plays out and how that affects Monday. We're going to take a look at some stocks that moved here up in the after hours, and then jump into some stocks that are in the news this week. So General Motors, Apple, Tesla, Johnson & Johnson, and so on. A couple stocks out there in the news. Then we're going to take a look at financials. Financials are starting to bottom out, starting to bounce up this week, coming off their lows. Goldman Sachs is one of the lowest there in the Dow 30. We're going to be taking a look at home builders. They've been getting wrecked. Energy, oil, dollar, silver, gold, and bonds. So if you are brand new to the channel, I do make stock market, personal finance, real estate investment videos every single week. So consider subscribing. And if you do have a video or content or an idea of what you would like to see as far as a video, let me know in the comment section below. I appreciate all your guys' feedback and reply to all of you. So let's go ahead and get into it. So I did start up my Instagram page. I renamed it. It's actually at Financial Investor 101 instead of the underscore. And then I kind of came up with my 6 favorite real estate investing books. Number 1, The Millionaire Real Estate Investor. Number 2, The ABCs of Real Estate Investing. And number 3, Real Estate Rehab Investing Bible. Those are my top 3. If you had to read only 3 books to kind of get started, those would be my 3. You have the whole mindset and how to do the whole process of kind of getting in the mindset of real estate investing and how to go about that whole process. And then Real Estate Investing Bible, this book has been really helpful as far as estimating repairs, what you need to repair in order to bring up the best value in the home. So as you know, I bought 2 properties now. I bought my 3-bedroom, 1-bath, which is completely finished and getting rented out now. I bought a 4-bedroom, 2-bath, which is a duplex, and that one's getting finished up. It's going to be put out for rent here soon. And I'm going through a refinancing on my 3-bedroom, 1-bath right now. So I'm going through that whole process, and I've been doing the BRRRR strategy where I buy it, rehab it, rent it out, refinance, and then repeat the whole process over. So I'm going to start posting some fun content over there on Instagram and kind of share a little bit more information over there, as well as YouTube, kind of bounce in between. So I purchased one item on Black Friday, and this is sort of me and my wife's holiday gift, Black Friday plus our sort of Christmas present. We don't shop a whole lot for Christmas time. We shop a little bit for our kid, but besides that, we don't really buy ourselves a whole lot of items. So this item here was marked at many locations for $449 on Black Friday. If you are a veteran and you went to Lowe's or Home Depot where you get that 10% discount, this item, which was already on sale for $449, was able to get knocked down 10%, going down to a total of $404.99. I had received a $50 gift card from work or from some sort of an event that I got for free for winning, so I applied that $50 towards the Lowe's percentage as well, and I knocked down the total cost to $354.99. Now this product normally is $699.99. We ran this thing this last week for the last 5 days, and every single day that it runs, it picks up a ginormous amount of just stuff from we have no idea. It goes underneath the bed, it goes underneath all of our dressers, and it just gets in places that we would never have really looked to have gotten into, because we vacuum on what we can actually reach. We don't go underneath the bed, we don't go underneath the dressers and stuff. So it's been a really nice kind of handy dandy machine there. So did you guys do any Black Friday shopping? Let me know in the comment section below. So Apple kind of starting back up their production of the iPhone X. A few of the semiconductor companies in the past saying that they had reportedly had production, like slowing down production of their items, but Apple is reportedly starting up more iPhone X production. iPhone XR, I believe, was their best selling item right now as far as going out the door. So interesting articles to kind of check out. Stock market was a bit like overheating, not really overheating, but October we got hammered early November, we were pretty much hammered as well. Fed came out, I believe it was Tuesday night. Fed came out, Powell came out, kind of lining up the whole market, saying that we've kind of got the markets exactly where you want to have them as far as rates go. We are just about ready. We're still probably going to proceed with that December 16th rate raise, but we may end up slowing and not having 3 in 2019. So the stock market really liked that. Now it's up to Trump to kind of go into these stock deals, trade deals on Saturday now with China and kind of wrap it up. Can he hit a home run? We shall see how that affects it all on Monday and what turns out here on Saturday. That'll be something big that'll affect us. I also made our video here, 5 stocks to buy next week going ex-dividend. Not really 5 stocks to buy, but the best dividend stocks going ex-dividend next week. Our winners were Genuine Parts, Gas Information Systems, Arthur Gallagher, First Merchant Corp, and Chemical Financial. So those 5 stocks, I have an article there. It's available on my website. Link in the description below to the website, and the article is right there on the first main page. Dow had a huge bump up here on the 28th. That was on, what was that? 28th was Wednesday. So we had a huge ride up. So look at this. S&P 500, the NASDAQ, the Dow Jones all gained nearly 2.5%, with the Dow Jones ending up 617 points. So amazing rally there. That was after the Fed came out and kind of said that, he kind of worked his way and worked his magic on the market there. So teaching your kids about money, my kid, he cleans up his room, he collects laundry around the house, he puts them in the bin, he takes the storage bin to the washer, and he kind of just puts it there for now, and we're having him do a bunch of little items, and we pay him, and he puts some money in his piggy bank, and then we have an account over at my credit union where I work at, and kids are able to come in. If they put some money in over $5, they get like a little treasure box that they can kind of pull something out of. So we've been kind of doing this whole process of teaching our kids about, teaching our kid about money. And I saw this over on Instagram by Joe Money Podcast, and I thought that was a great kind of share. So I kind of shared that information out there. If anybody else has any other tips, I'm trying to come up with a card game. I play Monopoly with my kid. He's 3 years old, and this kid wrecks me at it. But I'm trying to come up with maybe like a card game that I can play with him. They kind of teach him about, finance. So I thought that'd be kind of fun. That makes some sort of a game that's card-based that would be kind of tailored towards the younger crowd to kind of get them in the mindset of financial education. So Friday, last day of November, portfolio has been sort of brutal the last month and a half, especially with Apple. Apple lost like 19%, I believe, this month. We're going to be doing our monthly recap. My IRA holding mostly Apple just got wrecked lately. Bitcoin news, crypto no longer to the moon. I have a really fun little meme on this as far as where the moon's placed in comparison to the world and where the moon is currently at, where Bitcoin's at now. Anyways, DJ Khaled, Floyd Mayweather were charged for $500,000 for promoting cryptocurrency without disclosing they were paid. I forgot how much they were paid. They were only paid a couple. I think DJ Khaled was paid $300,000. Mayweather was paid about $50,000, somewhere in that range, but they didn't disclose it while they were promoting it. So they both got slammed by the SEC for $500,000. And here's Friday. President Trump signed a trade deal with Mexico and Canada. Saturday is China. Powell set up the pins. Can Trump hit them down? So that is basically it. And then we did have our index changes for the week. So major rally here as far as the indexes go. S&P up 4.85%. The Dow Jones, we're going to cover all these. So we'll just cover mine. I went up 4.06% this week. My Apple didn't rally, but the rest of my portfolio did. So hopefully in the next few weeks, as Apple kind of gets out of this, the depression, it'll kind of bump up, and you'll see my portfolio begin to kind of overtake these other indexes. Hopefully we'll see how that plays out. I think the whole Apple thing is overdone. So S&P 500 5-day change again up 4.85%, back into the green, up 3.24%. The Dow Jones this week up 5.16%. This is the winner this week, up 3.31% now year to date. The Nasdaq here, 5-day change up 5.64%, year-to-date up 6.19%. The Russell 2000, this was our loser this week. It gained nearly 3%, but it's still our loser of the week because it had the least amount of gain. Year-to-date still in the negative by 0.15%. The emerging markets this week up 3.37%. Year-to-date still down 12.82%. They were down at some 17, 18% down for a while. So the emerging markets they bottomed out at about $34. I know a lot of investors out there, a lot of you guys in the comment section left me comments saying, hey, I bought into the emerging market at that $34 or $36 point. So this is looking pretty good for you guys out there that are holding this. Okay, stock futures right now, as we ended Friday going into the weekend, stock futures are looking very positive. President Trump signing the trade deal with Mexico and Canada. We're going to see how this plays out here with China, and that's going to play a big part here at the G20 summit. How Monday is going to go. Are we going to, is something going to get signed? Is it going to get postponed? Is, Trump going to tweet something that's going to rock the markets on Monday? We don't really know until it happens. So we'll see how Monday plays out. So some of the most active here in the after hours, as far as leaders, I see Zynga up 1.66%. H&R Block, it's almost tax season. I'm sure somebody's out there probably doing some taxes, up 1.48%. Not a whole lot of known stocks within there. New York Community Bank, interesting. AT&T going down slightly after hours. Interesting ticker symbol there. FANG. Cisco moving up slightly. Not a whole lot of movement here. We had Microsoft kind of continuing to move higher. They are on their 52-week highs. They actually now hit the $1 trillion market cap. They closed above $1 trillion market cap for the first time. If we went over to look at it at Google, it probably showed that. There wasn't a whole big celebration of it. I know they made a huge deal when Apple hit that $1 trillion market cap. I know it was all over the media. Verizon, General Electric. General Electric kind of trending back down again. That's not one I would ever suggest any investor dive into, especially at these points. There's so many better stocks out there. Why not buy something that is actually going to trend in a healthier looking stock? Starbucks there. Pfizer hitting some new 52-week highs. Coca-Cola coming off their 52-week highs. Walt Disney hitting 52-week highs. And Micron Technology kind of coming off those lows, I believe. So Amazon this week made some huge reports here on Monday. So look at that, up 5.28%. So Amazon announced that shoppers preferred shopping on the web, so their sales were higher by some 24%. So huge, nice uptick for Apple at 5.28%. Wednesday again up 6.09%. Forgot what happened on Wednesday. I don't believe that's when they announced their locations of New York and Michigan. I thought that was already announced in the past week. So I don't have anything as far as in my head where the 6% came from. They may have done some sort of merger. I think there was a merger or some sort of a talk. I don't see. No, I don't see a whole lot here as far as what may have cost them the boost here. Oh, that may have been General Powell just coming out on the after hours there and discussing that they're looking to kind of slow down rate hikes. That may have been that. I know there was a huge rally there on Wednesday. We're going to see that across the board here. So maybe not. Okay, so General Motors came out on Monday also announcing they're going to be closing an assembly line in Canada, and I think it was 4 or 5 additional ones in North America over here in America. And President Trump came out after hours saying, "Stop it! Why are you doing this?" And that was a big fiasco. So there's some 2,000-3,000 jobs somewhere in between there that were just cut here in North America. So we shall see how this sort of plays out. General Motors, kind of interesting to kind of see it continue to trend up. Closing of factories means that revenue will probably decrease, but also that debt, we'll see how this kind of plays out. I'm actually surprised that it's up for the week, up 5.62%, year to date down 7.42%. General Motors or any sort of vehicle companies, I don't see, Ford, General Motors, Nissan, Toyota, basically the United States ones. So General Motors and Ford and Tesla. I think Tesla is going to be kicking them later on as they're not really moving into this whole electric vehicle and automation. I know General Motors is doing some testing down in San Francisco, I believe, and I think Ford is doing the same. So Apple came out and they started off pretty well this week. Up 1.35%. After hours, President Trump came out saying that he may enact some sort of a 10% tariff on devices imported from China, and that put a lot of pressure on Apple. You can see a huge dip here in the after hours, the uptick there as far as after hours. I can't think of the word right now. It's 12 in the morning, and I'm trying to get all these words out of my head. for the most part, Apple is starting to begin to trend off those lows. I saw a lot of investors buying up lots of Apple, buying it at 172. So if you did buy it on Monday, if you did buy it on Tuesday, I bought some more Apple this month as well. I'm not sure if I didn't buy any this week, but I bought some during the month of November. So up 3.65% this week. Year to date, up only 5.53%. My portfolio was hammered in October and a little bit in November. So United Technologies, this one is an interesting one, very similar to Triple M. And there was a big thing here kind of going on. Monday they came out, I believe it was actually after hours on Monday, but they came out saying that they're going to be splitting up into 3 different companies. They're going to be splitting up into their elevator, their air conditioning, and their aerospace company. So these are all kind of going off and splitting off. And I know another channel out there, Ian, PPC Ian, if you don't follow him over there, he's a great channel, talks about dividends. Highly recommend him. He made a great video going over his company. It's his number 4 holding as far as like stock goes. It's his number 4 stock, and he kind of went over a really good process of what his decision is, kind of either to buy or hold it, and he's gonna buy it. So check him out, PPC Ian. Tesla, they got a little bit pressured here towards the end of the week. This was, what was it? Oh, the numbers from China came out. So China numbers came out. They had only sold roughly 200 and some cars over in China in the last month, and this was a 70% decline over last year's numbers. So, or was it last? Last October. So they did go down slightly here on the news, but bounce back up on Friday. With the whole stock market here rally kind of finishing up towards the end of the week, I don't know of a lot of stocks that kind of lost on Friday. Johnson & Johnson hitting their new 52-week highs here. You can see closing at 146.90. 52-week high today was 148.75. They did pull back. Okay, looks like they may have bounced here in the after hours. Up now back near their 52-week high. So here at their point here, 148.75. That is their 52-week high. I know they hit it this week. So I've seen a lot of investors wanting this one to drop, waiting to invest in this one. This is a very interesting one. It's always a great stock to buy and hold. It's really hard to find a good buying opportunity for Johnson & Johnson. When I look at this one on Y charts, this one very rarely falls below its 200-day moving average. And that's where I look at stocks. Do they fall below that 200-day moving average? Do they have good financial metrics? Then I, look at the rest of their data and, kind of go over it. So Johnson & Johnson, I know a lot of investors out there are wanting to buy it, but it's just too expensive. Same with Walt Disney. Remember when this one was only $100? It was like $97, $98 for the longest time. If we take a look at it year to date, there was a period down here where it was actually trading for less than $100. And now they've acquired the remaining assets as far as, Fox Media. I know they bought back a number of their assets, and that's going to be put in them they also own like a portion of Hulu. So they're going to be doing some sort of media outlet going into 2019. I think that's going to work really well for them. I would like to buy some Disney, but right now at this price, I would really like them to fall back into that $107 range. I think that would be a better buying price than right now. But I don't know how this will kind of play out over the long term. If Walt Disney will fall back down here, we can kind of see that it has fallen, hit that $112 point, and then recovered. If it can come back to about 110, that would probably be its next, its support level here. So if it falls back down to about 110, that's where its support level is. And that's probably where you would be have the best opportunity to buy it, and then have it recover, kind of trend there sideways until some other news comes out that brings it back up. Facebook up this week, 6.74%. Year to date, this one tanked 20.32%. Now, they did have some really good news here. You can see a huge loss there. This is the whole what's it called? Cambia. Boy, I can't think of it. Cambridge Analytica. They had the whole spiel with Russia and getting hacked and stuff. So Facebook came out this week saying that they're considering charging companies to access their user data. So this is going to be something that Mark Zuckerberg has quoted in front of the Congress as stating that we don't really sell the data, but if they do end up selling that data, that could be a very nice source of revenue. So this is making kind of Facebook bounce off those lows. So this was an interesting point. Let's see, just over the last 3 months, have they broke below? Yeah, they had broke below 140. I've been looking at Facebook for a while. I don't really know what portfolio to add it to. I don't want to sell my Apple within my IRA, and I don't want to load up Facebook inside my wife's Roth IRA. So I'm kind of torn between where I want to buy it. But it's one of those stocks I would probably buy if I just could find out where to put it. Now, financials. We talked about Goldman Sachs a little bit earlier. It's the lowest in the Dow Jones. Financials are starting to begin their kind of pullback. This is something I like to look at every week. How are financials moving? Financials have been getting hammered earlier in the year, but they're starting to kind of pull off those lows here. So here, down for a bit here during October, hitting that $25 point. You can see they're only up slightly now at $26.97, but can they kind of continue this whole process of continuing up? So this week they're up 3.73%. Year to date, they're still down 3.37. I didn't cover any specific, financials. I know JP Morgan is up 2.7%. Actually, it may be up more. Let's go ahead and just look. We'll look at JP Morgan real quick and Goldman Sachs because I am interested. It's up 4.26% this week. And Goldman, oops, I typed in an extra A there. Goldman Sachs up 0.84. So year to date, Goldman Sachs down 25.15. I'm not recommending going out and buying Goldman Sachs. I don't know a whole lot about it. I prefer JP Morgan, and there's couple other financial institutions out there. Ticker symbol CIFI, I believe. I know I've covered it in stocks that go in ex-dividend next week. These other financials have been paying out dividends for 10 plus years, 20 plus years, have great financials, and could be better bond opportunity. So JP Morgan's only up 3.97% this week, and that's just because this week they came off those lows and out of that negative. Home builders up 2.84% this week. Down year-to-date 19.77%. So there was some news kind of coming out here on Thursday that sales have begun to kind of slow down, but this is the same news that we hear every single month. Home builders comes out, or just some numbers from Zillow or Realtor comes out saying that there's some sort of a downside move, and that causes home builders and these other, Zillow, Realtor, and a few of these other companies within that sector to kind of get mellowed out and kind of fall a bit. So interesting. I don't know if anybody else holds any home builders. I don't know many investors that actually hold home builders ETF. So if you do, let me know in the comment section below. I'd be kind of interested in why you hold home builders and the whole mentality behind it. I prefer REITs if I'm trying to hold something with real estate related. I like to hold REITs versus buying the home builders. So let's go take a look at the week for November, the last week here. So let's kind of scroll down. So if you guys would like here, as I get to this area, boy, I'm having a hard problem there with my mouse. So here, Monday, Tuesday, Wednesday, Thursday, Friday, if you guys want to pause it, read through it. But basically, oil was pretty much hit for this week, down 0.92%. It's basically kind of trending at those 52-week lows now. So we went from highs to lows in just about, a month or two. So here we can see our highs here back in October 2018. We're now at 52-week lows. So this is kind of a crazy moment. They were trading almost at $16, and they fell all the way down below $11 right now. So I've seen a couple other investors out there, you guys in the comments, saying, hey, I've been picking up oil at this price. So are you guys averaging into that right now, buying up some more? Or are you guys kind of buying this and also buying something like a Delta Airlines to kind of average yourself out? So if oil does bounce back, take advantage of the oil opportunity. But if oil continues to trend down lower and these airlines continue to take advantage of that cheap oil, that makes them better. So you kind of get that balance there. I know another investor did that. They bought Delta Airlines and have been buying the oil ETF. So dollar this week, haven't really tracked it this week. I believe it did move. Looks like it didn't move too much. It looks like it moved up slightly, 96.92. Then on 97.20. So the dollar moved up slightly right here. You'll probably expect silver and gold to move down. So silver and gold down 0.75 and down 0.20. So dollar getting stronger. Stock market possibly showing a rally with Powell coming out there saying they're going to be easing rate hikes possibly into the future. They're feeling comfortable where it's at. Trade deal possibly getting in the works. Trade deal with Mexico and Canada signed Saturday. We'll see how that plays out. But gold and silver, I know people getting hammered in these. They do really well sometimes, but at the same time, it's, over the long term, even bonds. I've seen a lot of people mention that they bought into these bond funds because they had a lot of volatility within their portfolio, but now they're getting charged with all sorts of fees for these bonds. They're actually not moving it up or really help their account out. They're still losing some sort of a. They're not taking advantage of these movement in the markets. This week alone, we bounced up some 4%, almost 3% across the board, almost 3, 4%, 5% in some instances. So you're out there buying bonds and you're staying flat for the week, up 0.15% for your entire portfolio, whereas the rest of the market's kind of rallying. So, at the same time, October was terrible, but if you sold at, October when your portfolio tanked 10% and you sold out of your entire portfolio now, and now the market's starting to bounce up in a single week up 5%, that would have made up your entire, half your loss there for October. All we need is another rally here on Monday, and your entire portfolio would have been back where it's at. You would have been capturing those dividends or, the equity appreciation within your portfolio and just continued rolling on. So kind of an interesting debacle. 10-year going down. I know last week it was 3.07. This week, 3.01. So 10-year starting to go lower and lower. We're going to see if it breaks below 3% next week. I think that'll be better for the markets as well. Prime rate still 5.25. December 16th is when they're expecting rate hikes. I'm talking to my my lender downstairs. I work at a credit union, so I'm refinancing my property right now with them. They don't offer the best rates, but they give me more cash at closing. I'm able to pull out roughly $3,000 more. I don't have to pay out $3,000 more in lender fees versus if I go out there and get a loan at 5.25%, I only walk away with about $3,500 less. So I'd rather have more cash in my hand versus a lower rate, because over the long term, I only end up paying a few $1,000s extra in interest, and over the time, I'd rather have more cash in my hand at the end of closing. So December 16th, rates are going to be rising. That may affect the market. We'll see how that kind of plays out. So that is it for this video. So I hope you guys did enjoy it. Let me know in the comment section below. Is there something that you're looking forward to in December? How has your portfolio been? I know my portfolio is pretty much, I don't know where it's at as far as start of the year. I took out a lot of money out of the market since the beginning of the year. So there's been instances where I haven't been fully tracking. I know I'm positive across all my portfolios. I'm still green. I'm still up in the Roth IRA. I'm still up in my IRA. I'm still up in my Roth 401k. I'm still up in my thrift savings plan. So I am positive for the year. I just don't know where I'm at for 2018. So that is it for this video. If you guys did like the video, hit that thumbs up button below. Again, if you're brand new to the channel, hit that subscribe button. Cover stock market, dividends, real estate. I create apps. I got 2 free ones down in the description below. One that calculates how much money you need to deposit weekly, monthly, yearly to hit your retirement goal, and the other one for dividend investors. So check those out. They're both free. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Quick disclaimer. I am not a financial advisor, tax professional, anything of the sorts. All these videos are for fun and entertainment, and that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.